Gilead Sciences just hit a 52-week low, but smart money is quietly accumulating shares. Here's why this biotech powerhouse could double your investment. Listen, I've been in this game for decades, and when I see a company like Gilead Sciences trading near its lows, while institutional investors are quietly loading up, my ears perk up. This isn't some speculative biotech burning cash. This is a cash-generating machine that Wall Street has temporarily forgotten about. Let me give you the facts that matter. Gilead generates over $24 billion in annual revenue. They're sitting on a cash pile of over $7 billion with minimal debt. Their operating margins consistently exceed 20%. Show me another biotech with those numbers. But here's what really gets my attention. They're trading at less than 10 times earnings. The average biotech trades at 30 times earnings or more. Either the market has lost its mind or there's an opportunity here that most investors are missing. Gilead didn't become a $40 billion company by accident. They own the HIV treatment market with drugs like Biktarvy and Descovy. These aren't one-hit wonders. They're franchise drugs with patent protection and pricing power that generates billions in recurring revenue year after year. Their hepatitis C portfolio revolutionized treatment and established Gilead as the go-to company for antiviral innovation. When COVID hit, who did governments turn to? Gilead, with remdesivir becoming a standard treatment. Here's where it gets interesting for long-term investors. Gilead isn't resting on their HIV laurels. They've got a robust pipeline in oncology, inflammatory diseases, and next-generation antivirals. Their CAR T-cell therapy program through Kite Pharma is generating serious revenue growth. What I love most is their approach to acquisitions. They're not overpaying for flashy startups. They're making strategic purchases of proven assets and integrating them efficiently. That's how you build sustainable value. Let me talk about something that really matters: cash flow. Gilead generates over $8 billion in free cash flow annually. That's real money hitting the bank account, not accounting tricks. With that cash generation, they fund their pipeline, make strategic acquisitions, and return money to shareholders through dividends and buybacks. They're currently yielding over 4%. That's income you can count on while waiting for stock appreciation. I'm not going to sugarcoat this. Every investment has risks. Patent cliffs are real in pharma. Some key HIV drugs will face generic competition eventually. The question is whether their pipeline can offset those revenue declines. There's also regulatory risk. The FDA can be unpredictable, and drug approvals aren't guaranteed. Healthcare policy changes could impact pricing, though Gilead's essential medicines provide more protection than most. Here's my thesis. Gilead is trading like a declining pharma company when fundamentals suggest it's a stable cash cow with growth optionality. The market is pricing in worst-case scenarios while ignoring the company's proven ability to innovate and execute. Smart institutional investors are accumulating shares because they understand something: retail investors are missing. Quality companies at discount valuations don't stay cheap forever. When sentiment shifts, you want to be positioned before the crowd figures it out. I've seen this movie before. Strong companies with solid fundamentals get beaten down by market sentiment, creating opportunities for investors with patience and conviction. Gilead Sciences checks all my boxes: dominant market position, strong cash flow, reasonable valuation, and competent management. Over the next 3 to 5 years, as their pipeline matures and the market recognizes their value, Gilead could easily trade at 15 to 20 times earnings instead of 10 times. That's a potential double right there. Do your research, understand the risks, but don't ignore the opportunity. Sometimes the best investments are hiding in plain sight. Gilead Sciences might just be one of them. Let's recap why Gilead Sciences stands out for investors right now. The company boasts a dominant position in HIV treatment, a robust pipeline in oncology and antivirals, and generates billions in free cash flow every year. With a low valuation and a strong dividend, Gilead offers both stability and upside potential. But before you invest, consider your own risk tolerance and time horizon. Biotech stocks can be volatile, and while Gilead's fundamentals are strong, every investment carries risk. Make sure Gilead fits your personal strategy and long-term goals. Keep an eye on Gilead's upcoming drug approvals, clinical trial results, and any major acquisitions. These events could drive the next phase of growth and shift market sentiment. Staying informed gives you an edge as an investor. Do your own research, consult with a financial advisor if needed, but don't overlook Gilead Sciences. Sometimes the best opportunities are found in companies the market has temporarily forgotten. Gilead Sciences is positioned for the future. If you believe in innovation, resilience, and long-term value, Gilead deserves a spot on your watch list. Thanks for watching, and invest with confidence.